Joining us right now to talk about that and the sale is Deputy MD at the bank, Mr. Samuel Joseph Jebaraj. Mr. Jebaraj, thanks very much for taking up the time. Run us through this subsidiary stake sale and how it fits into the overall, strategy of the bank to move out of non-core businesses.
Yeah, thank you. As you rightly said, non-core asset investment is usually done for shoring up of capital. But in our case, as you also mentioned, that this amount was just 215 crore, which is not a big amount at all. And hence it was not done for shoring up of capital, for generating internal capital. Rather, it was for complying with the regulatory norms of SEBI. SEBI had given us time up to January 2020 to exit the AMC business, because within the same group, there is no possibility of having two asset management companies. After we became a 51% subsidiary of LIC, since LIC already has an asset management company, this asset management company had to be divested, and that's the reason. It was not for shoring up capital or for liquidity purposes.
Okay. So let's talk about the game plan going forward now. While this particular aspect of the business has been done away with, anything else that from the IDBI Bank stable, from a non-core asset point of view, looks like you would be venturing out and finding buyers or suitors for? Or that's about it?
It's already in the it's already in the public domain that we are also looking at divesting our stake in IDBI Federal. But there, unlike in the mutual fund, where we and our 100% subsidiary, IDBI Capital Markets, together held 100% shareholding, in this we are 48% shareholder along with the Federal Bank and AGS. So it is a little more complicated than the divestment of the mutual fund, but we are in discussion and hopefully we should see some traction there going forward. We are in the midst of the process of finding some bidders and divesting the stake there too.
All right. So the deadline of January is for even this business, or you can find your strategic suitor?
No, this is not a regulatory requirement.
Okay.
This was not a regulatory requirement, but since now we are with the LIC, it is proper that we exit this business. But as I said, there is no regulatory compulsion, and hence there is no deadline or there is no hurry to exit at whatever price we get.
All right. So back of the envelope calculation for that business, while this is about 215 odd crores, and you said this is not to shore up capital, this is just to meet regulatory requirements. Is that a substantial amount that would help you shore up capital for that business?
That's again not a big amount,
okay.
But at present I'm not able to divulge because the bidding process is still on. So we are yet to put a price to it.
Samuel, a brokerage note suggests that their calculations bring out all the unlocking of value amounts adding up to close to 30 billion rupees, so 3,000 odd crores, 3,200 odd crores. Would that be a good estimate?
We have this is an ongoing process.
Of course.
We have already sold some shares of the National Stock Exchange that we were holding, so on and so forth. So I am not able to either confirm or otherwise this number of 30 billion that you mentioned, but we will wait for value maximization as well, because at present the capital position of the bank is quite comfortable after the recent capital infusion by the LIC and the government. So there is no hurry, and we will wait for value maximization also. So I am not able to put a number to what we will divest this year, monetize this year and the next year as well.
Okay. Well, you did make those accelerated provisions to bring down your NPAs below the PCA threshold. The belief that almost everybody has is that your, while you've done all of this, the P&L normalizes starting FY21. We've ended the first half of FY20. The second half still remains. Can you give us some color about what would happen in the second half, and will the normalization process start only in FY21, or could it happen earlier?
To some extent, even in the second half of this year, we should be back in profits. As you rightly said, the loss in Q2 itself was on account of the accelerated provisioning because we wanted to be below the net NPA norms of 6%, and we have managed that. And going forward, we are very confident that we will still remain below 6 because we have done a granular analysis of our portfolio, including the SMA portfolio, what could slip, and including the emerging stress in sectors like telecom, NBFC, so on and so forth. So based on that, we are confident that we will still be below 6 going forward. And some recoveries, as you are aware, IDBI Bank's legacy NPA portfolio is majorly in NCLT because it was largely large corporate and infrastructure lending. So a large proportion of our NPAs are in NCLT, and with this SR judgment having come, we are hopeful that there will be movement on the NPA resolution front as well. So we are very confident that in Q2 itself of this year, that is 1920 itself, we should see some internal capital generation from profits in Q3 and Q4. And 2021, of course, we will be normalizing our P&L, as you put it.
Okay, so since you brought up the topic of NCLT, I just wanted to gauge from you the total amount of disputed loans that are there for IDBI with NCLT that you're expecting a resolution for. We spoke to other banks as well. So Corporation Bank, for one, while it had about 1,600 crores for SR Steel, they said there are other 2-3 accounts in this year itself where they could gain another 2,000 crores odd. So for IDBI Bank, have you made that kind of a calculation as to where you expect the kind of recoveries to come from and what the quantum of those recoveries could look like?
In SR, we will be recovering about 2,200 odd crore. That's quite a good amount for us. And just to give a flavor of the numbers that we are talking about, in the first and second list of RBI, which were together about 41 cases, we had exposures in 30 cases, and with gross principal outstanding of about 25,000 crore, a little less than. It was about 24,780 crore. Against these 30 cases with about 25,000 crore principal outstanding, we have made 100% provisioning. So that is the best part of it. And for the NPA portfolio as a whole, our provision cover is at about 92.15%. In NCLT, since even in the first list and second list of RBI, a lot of resolution is yet to happen, we are confident that this SR's judgment will set in motion a spate of other resolutions as well. And hopefully maybe Bhushan Power and Steel also will be decided, because that will also set some precedences for the other cases to follow, since Jindal's case about attachment of the property by ED and also the profit generated during the resolution process. If those are also settled, then probably this will set in motion the other resolutions as well. So we are confident that there will be traction in this, but we are not putting a number to it. But as I said, out of our total NPA books, about 40% of the NPAs are already admitted, and about 65% have been admitted and in the process of being admitted. So that's a big number of the NPA book that we have, and we are hopeful that there will be a resolution soon.